Hey guys, there's 3 ways to invest and finance real estate that most people don't know about. Stick around, we're going to go over all 3. All right, guys, so here we have 3 options of how you can invest in real estate. You can have a long-term play, which is the buy and hold. You buy the property and you hold on to it. You can either live in it, or you can have it purely as an investment property. If you are living in it, and it could be up to a 4-unit residential property. And you can buy that using cash, a traditional loan through the bank, joint venture partnership with somebody that's got money, and they might want you to do all the work and they just bring the money. Or you can use other people's money altogether, have someone that's a money partner. So fix and flip, this is the second step. Fix and flip is a short-term play. And what that means is you buy the property, you fix it up, you improve it, and then you resell it for a profit. And what a lot of investors do is they'll do a lot of flips, and then all the money that they make, the excess, they invest it right back into rental properties. So here's the ways that you can, most of the investors that we work with that finance it, they use hard money loans. And that's basically other people's money that you're using on a short-term basis, usually under a year, to be able to fix the property up, resell it, pay off the hard money lender, and keep the rest. You can also pay cash if you have it. You can also use a traditional bank loan. You can do a joint venture partnership, and you can also use purely other people's money. The last option how you can make money through real estate is wholesaling. That requires you to have $0 down. All you're doing is reassigning the contract over. So you put a property in contract and you reassign that contract for an assignment fee, having to come up with 0 money down. It's a very popular strategy. And if you are a wholesaler and you have properties here in the Springfield, Dayton area, Columbus area, give us a call, put us on your list. We're interested in purchasing properties. All right, so here are the actual options of financing that you can take advantage of. The first one is the bank traditional. That usually goes through an approval process. You have to be approved, show you 1099s, W-2, stuff like that, and there's usually an appraisal. Second thing is cash. If you have cash and you just want to get a better deal, you can pay cash and it can be a quick closing. Third thing is owner financing. You can do a land contract with the owner. Say you give them a portion down, you finance the rest. The owner is your bank. They charge you typically a higher interest rate than would a bank. There's usually a balloon period, meaning that the loan is due before the 30 years is up. Say there's a 1-year, 2-year balloon. So it's a good option to take advantage of. And actually, I'll show you the first fix and flip that I personally did back in 2014 was a land contract owner financing deal. You can also do a rent to own. That's basically renting with an option to own. So some of your money that you pay towards the rent may go towards the down payment. It's very flexible. Hard money loan. This is the money that a lot of investors use when they purchase properties. And this is basically money that they are lended out from an individual. And usually what they're looking for is for the after repair value to be at 70%. So what that means is if you find a property and you buy it for $50,000, but it's worth $100,000, you can spend up to $20,000 to fix it up before you get to the 70%. There's usually a 10% down payment required from you, skin in the game. And usually you pay 12% interest and usually pay 3 points on the backside, which is 3% on the final sales price. So this is a little bit more expensive. So you want to make sure that you get a project and you get it done fast. So the other option is other people's money. You can have a 100% investor come in, buy the property, and you play the manager role. The other option is a joint venture partnership, to where you're 50-50 partners. There's some equity split on both sides. So with that being said, here's an example of a property that I personally did a fix and flip on back in 2014. It was a property in Dayton, 3886 Wales Drive. And it was a creative financing deal, land contract, owner financing. So I negotiated the price with the seller for $50,000. I gave her $5,000 down. The property needed work, needed upgrades. So I financed $45,000. I took on her mortgage, taxes, insurance, repairs, utilities, everything. And that came out to right around $700 a month. So, and I had the property for about 3 months. So I was accruing about $2,100 in expenses, $10,000 in repairs. That was out of pocket for me, as well as the $5,000 down. That was out of pocket. So I was $15,000 all in. Took 3 months. So that was around $2,100 total. So all in all, 50 plus the 10 plus the 2, we're looking at $62,000 all in. And I sold it for $76,000 cash. And so we cleared a profit of around $14,000 in 3 months. We did a simultaneous closing. It's called a double closing. And the seller got paid the remaining of her balance, and I collected the difference. So this is just one of the ways how you can structure a deal. You don't need to be approved through the bank. You don't need to have the cash or all of the cash. You might need some of the cash. But there's so many different ways how you can finance the deal. And if you guys have questions about hard money loans or how to get some of the hard money loans, or if you're looking to get into some land contract opportunities, we've got some of those houses for sale as well. So be more than happy to share that with you. So make sure to like, subscribe, and share this video if you got some value out of it, and we'll see you on the next one.